What if everything you've ever been told about the stability of the global financial system was a lie? What if the very systems that we depend on, like our banks, our savings accounts, even our pensions, have been secretly hijacked for decades by a hidden network of global elites? What if the inflation you're seeing right now, the rising unemployment, and the disappearing middle class are not just the results of bad policy or global events, but carefully engineered transfers of wealth from your pocket into the hands of the richest 1%? It's a nightmare scenario, but it's happening right now in real time. And no matter how much they tell you about economic recovery or how the markets are rebounding, the truth is far darker. The 2025 collapse agenda isn't a theory, and it's not something happening in the far-off future. It's already set in motion. There's a shadow network of financial institutions operating in the dark, outside of regulatory oversight, that quietly move trillions of dollars into the hands of a select few while the rest of the world suffers from wage stagnation, rising costs, and uncertain futures. Do you feel the economic pain at the grocery store, or see the slow but steady erosion of your savings account? You should, because the mechanisms that keep this system afloat are on the verge of collapse, and you, the average person, are completely powerless to stop it. But what if I told you that they already know the date? That the system will crash as planned in 2025, and there's nothing you can do to change the outcome? Where are you watching from right now? I want to hear from you. Let's check in with each other as we uncover the hidden truths they don't want us to see. Make sure to hit that subscribe button, because you're about to learn the financial secrets the elites are hoping you will never find out. In the next 20 minutes, I will break down the 2025 collapse agenda and show you how a small group of elites are using financial instruments that could push the global economy into an irreversible decline. To truly understand the 2025 collapse agenda, we first need to look at how we got here. It's not a new problem. In fact, financial manipulation has been going on for centuries, evolving, perfecting its methods, and growing more dangerous with each passing decade. Let us start by taking a look at the 1929 Great Depression, the first major financial crisis in the modern age. The official narrative tells us that the crash was caused by too much speculation on the stock market, over-leveraged loans, and the inevitable bursting of a financial bubble. But what is often left out is the role of shadow banks and unregulated financial institutions that were providing the credit needed to inflate the bubble in the first place. Back then, banks and financial institutions were making secret deals to push more money into the system, artificially inflating the economy. The result? The stock market crashed, but the elites who had made the most money during the bubble walked away unscathed. Fast forward to 2008, the next great financial collapse. On the surface, it appeared to be a problem with subprime mortgages and toxic assets, but the real story was far darker. The financial system had become entangled in derivatives, collateralized debt obligations, CDOs, and credit default swaps, all of which allowed banks to hide unsustainable risk from regulators and the public. When the housing market crashed, it wasn't just homeowners who lost their wealth, it was the entire global economy. And again, the elite institutions were the only ones to benefit. And if you think 2008 was bad, just wait. The mechanisms in play today are far more dangerous and far more hidden from public view. In 2008, we saw $7 trillion in lost household wealth. By the end of 2025, that number could easily exceed $30 trillion, as shadow banking assets have grown exponentially, and the elite financial networks are now far more interconnected than ever before. Sound familiar? The bubbles, the crashes, the bailouts, they're always the same, with one key difference: the scale. In 2008, it took months for the ripple effects of the crisis to be felt globally. It's all thanks to the shadow banking system, an unregulated network of financial entities that exist outside the oversight of central banks and governments. These entities don't play by the rules. They don't have to comply with the same capital reserve requirements or report their exposures to regulators. But here's the kicker: they are the lifeblood of the global financial system. The shadow banking system includes everything from hedge funds, private equity firms, and special purpose vehicles, SPVs, to offshore tax havens, where financial transactions can be conducted in secret, away from prying eyes. These institutions work by creating, trading, and managing massive amounts of debt and financial products, many of which are designed to obfuscate the actual risks involved. According to a recent Bank for International Settlements (BIS) report, the size of the shadow banking system has ballooned to over $220 trillion globally. That's 3 times the size of the global economy. And these financial institutions are not regulated in the same way as traditional banks. Their transactions, including liquidity swaps, derivatives, and repo agreements, can move money around the world at lightning speed, without anyone truly knowing where it's going. And it gets worse. In 2025, when these liquidity swaps and derivative exposures mature, the system could come crashing down faster than you can imagine. This isn't like the slow-motion collapse of 2008. The next one is going to be instantaneous. It's going to be a financial meltdown like we've never seen before. And the elites who control the shadow banking system are already preparing to profit from it. But here's the thing. You want to believe the name behind the most influential liquidity swap network that controls half of the world as financial transactions. The receipt is even wilder than you think. Now that we've revealed the shadow banking system as the hidden backbone of the global economy, it's time to take you into the engine room, the part almost no one ever sees. Yet it's where every financial crisis is pre-programmed long before it ever hits the news. The average person thinks the global economy is powered by trade, innovation, or productivity. It's not. It's powered by liquidity, by money that flows from place to place like blood through veins. The elites know this. They've built an entire parallel financial universe that exists outside of your local bank, outside of government oversight, and outside of accountability. It's called the Liquidity Swap Network, And it's how trillions of dollars move in the dark, shaping markets, controlling currencies, and determining who wins and who loses before a single headline ever hits your feed. Here's how it works. A liquidity swap is an agreement between two financial entities, often a central bank and a major private bank, to exchange currencies or securities temporarily. The idea sounds innocent enough. It is a way to make sure that when one market runs short of dollars, euros, or yen, the central bank can provide them quickly to prevent panic. But over the years, that simple safety valve has become a massive, unregulated shadow market where central banks, hedge funds, and megabanks trade unrealized debt promises of money that doesn't even exist yet. And every time they do it, they inflate the illusion that the system is stable, when in reality, they're stacking debt upon debt, like a house of cards reaching into the clouds. In 2020, during the early days of the pandemic, the Federal Reserve quietly issued over $450 billion in emergency liquidity swaps to foreign central banks, including the European Central Bank and the Bank of Japan. Almost nobody in the public noticed. Those dollars weren't spent in the traditional sense. They were created digitally, backed by nothing, and funneled through a network of privileged financial institutions to keep the illusion of global stability alive. And here's the kicker. Those swaps are not disclosed in real time. There's a 6-month blackout period before the public is even told which banks received the funds or how much risk was actually transferred. In other words, the collapse already happens in secret, and by the time you find out, it's long over. The shadow banking network thrives on complexity. It's built to be incomprehensible on purpose, because confusion is control. The main vehicle for this manipulation? Derivatives. Derivatives are financial contracts whose value depends on another asset like a mortgage, bond, or even another derivative. The total size of the global derivatives market is now estimated to be over $600 trillion, with some insiders suggesting the true figure may exceed $1 quadrillion when you include off-balance sheet trades. To put that in perspective, the entire world economy, every factory, every farm, every business produces about $100 trillion in real goods and services per year. That means for every dollar of actual value in the global economy, there are $6 to $10 of synthetic financial bets floating above it like smoke. This is how the elites make their money. They don't create, they speculate. They don't innovate, they leverage. And when those bets go bad, they simply transfer the losses onto the public through bailouts, stimulus, or inflation. In 2008, this system nearly imploded when the derivatives tied to subprime mortgages began to unravel. Banks like Lehman Brothers had hundreds of billions in exposure, most of it hidden in special entities called SPVs, or special purpose vehicles. These SPVs were used to hide the bank's risk, keeping their balance sheets artificially clean while they gambled with debt. When the house of cards collapsed, $10 trillion in global wealth was vaporized. Millions lost their jobs, homes, and savings. But the architects of that collapse, the same institutions that caused it, received over $700 billion in direct bailouts and another $3.7 trillion in indirect liquidity support from the Fed. Sound familiar? It should, because that system never went away. It evolved. After 2008, the shadow banks and regulators made a public show of reform. They talked about transparency and capital buffers. But behind closed doors, they built something even more powerful. The cross-asset collateral market, a mechanism that allows banks to pledge any asset as collateral for any kind of loan. In practice, this means a bank in New York can pledge a bundle of European corporate debt, a fractional share of mortgage-backed securities, or even future revenue projections as collateral in exchange for new liquidity. These loans are then rehypothecated, meaning the same collateral is used again and again across multiple transactions. The result? The same dollar can appear dozens of times in the system simultaneously, each time creating the illusion of wealth where none actually exists. This is how $10 trillion in actual bank reserves can fuel hundreds of trillions in synthetic financial activity. It's the biggest magic trick in economic history, and like every illusion, it depends on one thing: belief. The belief that someone somewhere will always be able to pay when the music stops. Now let's talk about the repo market, short for repurchase agreements. Think of this as Wall Street's overnight lending club. Banks lend each other money for a day or two, using securities like treasury bonds as collateral. It's supposed to be low risk after all. These loans are secured by government assets. But the truth is, the repo market is where the shadow banking system meets the official financial system. It's the single point of contact between the visible economy and the dark one. In September 2019, something snapped. The overnight repo rates, the cost of borrowing money in this market, suddenly spiked from 2% to 10% in a single day. Banks stopped trusting each other. Liquidity evaporated. Within 48 hours, the Federal Reserve had to inject $75 billion into the market just to keep it from freezing. It was the canary in the coal mine, a warning that the system was breaking down. The Fed's intervention ballooned into $1.5 trillion in emergency repo operations over the next few months. But even then, the deeper issue wasn't fixed. The leverage, the rehypothecation, the off-balance sheet liabilities, they were all still there, just hidden under fresh money. Today, that ticking time bomb is even bigger. The global repo market is estimated to exceed $15 trillion in daily volume. And because the same collateral can be used again and again, the actual exposure could be 5 times that amount. One glitch, one confidence shock, and the entire system could seize not over months like in 2008, but in hours. Now we arrive at the newest and most dangerous frontier of the 2025 collapse agenda: Central Bank Digital Currencies, or CBDCs. On the surface, CBDCs are being sold as the future of money: faster, safer, cleaner, digital. But in reality, they are the final phase of control. Once digital currencies replace cash, every transaction becomes traceable. Every dollar becomes programmable. Imagine a world where your money can expire, where the government can limit your purchases, or even freeze your assets with a click. That's not speculation, it's already being tested. The People's Bank of China launched its digital yuan in 2022. The European Central Bank has announced a pilot program for a digital euro. And the Federal Reserve is quietly exploring a US digital dollar through partnerships with major financial firms. Here's what the elites don't tell you. CBDCs will merge seamlessly with the shadow banking system. Every transaction, every liquidity swap, every derivative can be tracked, analyzed, and eventually controlled. The goal is not transparency for you. It's visibility for them. They will know where the liquidity is, who holds it, and how to manipulate it at will. And when the next crisis hits, CBDCs will give them the power to bail out the system instantly, but at a price. Your financial freedom. Let's project this forward. As global debt surpasses $315 trillion and interest rates remain historically volatile, the cracks are already visible. Emerging markets are running out of dollar liquidity. European banks are over-leveraged on derivatives tied to U.S. Treasury yields. Japan's bond market is being artificially supported by its central bank's endless purchases. It's all interconnected. When one domino falls, say, a major hedge fund defaults on a $10 billion derivatives contract, the shockwaves will travel instantly through the liquidity swap network, through the repo market, through every system that depends on borrowed money. And in that instant, the illusion of stability will vanish. When that happens, the elites will be ready. They've already positioned themselves in hard assets: land, gold, rare earth minerals, private equity, and crypto custody systems. They'll ride the collapse while ordinary people are locked out of their bank accounts, told it's for security reasons. This is the 2025 collapse agenda in action. It's not just about profit, it's about control. The mechanism isn't one financial product or institution. It's the entire ecosystem of liquidity swaps, derivatives, repos, and CBDCs working together like gears in a single, massive machine. Each part hides risk, multiplies it, and transfers it upward. The top 0.1%, the real financial elites, aren't just betting on the collapse. They're engineering it. Because every time the system breaks, it gives them the chance to rebuild it in their image, stronger and more centralized than before. That's why 2025 matters. The liquidity swap contracts initiated during the pandemic begin maturing that year. The repo market is more fragile than ever. The derivatives bubble has reached astronomical levels. And the infrastructure for CBDCs, total financial surveillance, will be ready to deploy. This isn't just another recession. It's a reset, a planned implosion designed to consolidate power and rewrite the rules of global finance. And when the dust settles, the same people who caused the crisis will be the ones offering the solution. So, what does this mean for the future? Why does all of this matter to you right now? Because the next collapse will not look like the ones we've seen before. The tools and systems in place today are far more advanced. And the global scale of the financial market means that when it goes down, it will be fast, devastating, and nearly impossible to stop. We've already seen the warning signs: inflation, rising debt levels, market volatility, and increased tensions between global powers. The financial system is increasingly fragile, and the next crash is already in the works. But here's the worst part: the elites know it's coming. In fact, they are positioning themselves to make even more money when it happens. While the rest of us are struggling to keep up with rising costs, they're preparing for the collapse. They've invested in gold, real estate, and offshore accounts, while shifting their assets into private funds and hedge funds that are virtually impossible to trace. These elites will profit from the chaos, while you and I will be left to pick up the pieces. The 2025 collapse agenda is more than just a financial crisis. It's a global reset that will consolidate power and wealth into the hands of a few and leave the rest of us with nothing. The question is, will we be ready? It's not just about economic theories or bad policy anymore. This is the new world order taking shape right before our eyes. And the stakes are higher than ever. As we head toward 2025, the elites are making their final moves, and the only thing standing between you and them is the truth. Are you prepared to see it? Are you ready to fight back before it's too late? Hit subscribe and join me as we continue to expose the hidden truths of the financial system. The elites think they have all the power, but we still have the truth on our side. Share this video with those who need to know about what's really going on, and let's get prepared before it's too late. Are we wiser now, or are we walking the same path in better suits?